Good morning, everyone. Welcome to episode 95 for Canadian Mortgage Weekly. It's September the 1st and August is over. It's another one of those things where we look back at the summer and we see what's been happening, and it's been a crazy summer to say the least. So, welcome to today's episode. My name is Joe Bladek, and I'm looking forward to sharing some updates for summer of 2022 and some updates of what's to look forward to into the fall of 2022. Really excited to be here and what's happening with the market. First of all, it's been a crazy year. For those of you who have been watching interest rates, they've skyrocketed this year. It's been a crazy year. And if you've been getting pre-approvals or selling your home and buying a new home or refinancing, you've seen that the payments have just gone up huge. Perhaps you're one of those people waiting for the market to crash and you've been seeing prices just take a nosedive this year. It's been a pretty crazy year for that, and we're going to talk about that today here on Canadian Mortgage Weekly. Another thing to look at is, we have really interesting news about what's happening with the home prices right now. And maybe you're looking at selling and your house is not selling. Perhaps you need to look at some other options, or you don't know why your house is not selling. We're going to take a look at that today and make sure that we go over all that. And as I'm here going live, I'm going to be also trying to answer questions online here. So if you have any questions, I'll be able to see them on the screen and we can look at it that way. All right. So what's happening today? Let's look at some news that's happening today. We'll take a look at everything here today. My name is Joe Bladek. If you have any questions, drop them below. We'll make sure we answer them. But it's been a crazy market. It's been a crazy summer. It's been a good summer. It's been hot. Been able to get to the beach a couple times. Hope you guys have as well. Work has been a little bit crazy. It seems like people that are coming in to get mortgages can't afford what they want anymore. They can't afford the prices today. And it's funny because real estate prices have changed. They have come down quite significantly. And that doesn't really make sense, does it? We feel as mortgage brokers that, if prices come down, you should be able to afford that house. But essentially, payments have gone up. And with the payments going up, it's almost as if you can afford less now than back in the beginning of the year when house prices were much, much higher. So what does that mean? Well, it's hard to say what that means. And we're going to take a look at the data here. And I'll bring it up for us here in just a second. So let's take a look. I'll pop it in here. All right. Let's take a look at this today. All right. So looking at today's episode here, episode 95. Thanks for being with me for 95 episodes. It's been quite a journey to do this with you all today. Oh, I'm going to go back to that. Sharing the wrong screen, everyone. Let's look at this again. All right. Let's go back here. All right. Going back here. All right. There we are. So looking at this here, episode 95, thanks again for joining. It's been a crazy year for the market. Let's take a look here at the first slide. What I'd like to take a look at is why fixed rates have been falling while variable rates have been going up. I know a lot of people here don't even believe me when I say fixed rates have been falling. And it's a little bit troubling because that's what's happening. Fixed rates are a lot lower now than they were in June of 2022. So if we take a look at June 2022, we see here that the bond yield is what the fixed rates are based off of, was at its all-time high, was over 3.5%. And essentially, fixed rates are based off of this 5-year bond yield. And that bond yield had been rising steadily since September of 2021. And when we hit that peak in June 2022, we had 5-year fixed rates in the 5.5, 5.6% range. That made it a lot tougher for a lot of folks to afford a home. Payments had gone up considerably. And because of that, that stress test that's used to calculate those affordabilities had gone up to over 7%. But as the year went on and as the summer went on, we can see that the bond yield actually went down further until it bottomed out in August of 2022. And with that, we see that 5-year fixed rates took a tumble since the beginning of the summer. And as those 5-year fixed rates went down, we had a lot of customers come to us and get their pre-approval set up. And if you were one of those clients that came in the time during August, you would have been able to lock in at a 5-year fixed rate that's much lower than would have been in June of 2022. That's pretty exciting. Now, we have seen it creeping up quite considerably since then, and lenders have followed suit. But still, the 5-year fixed rates are still not where they were at the beginning of the summer. So that's actually really, really good to see. So if you're looking at getting a fixed rate and you think rates are going to continue to go up, then definitely look at that. Another thing is that we have the Bank of Canada interest rate announcement. This really dictates what variable rates stay at. And right now, the current overnight rate being at 2.5%, it's a lot higher than what it was, which is 0.25% at the beginning of the year. It's increased 1% as of the last announcement, and that next Bank of Canada meeting is September the 7th of 2022. So join me for a live pre-rate show and live rate announcement on that day when I'll go over what's available and what's happening there and how it's going to affect your mortgage. Really excited about that. And I think what's been really exciting and not so exciting at the same time is we had this big run up in prices. If you look at the orange line represents house prices. And as you see, we peaked in the beginning of 2022. And since then, this orange line has just been coming down. But as that orange line, which represents average house prices in Canada, has been coming down, we've been seeing rates go up. And something that is really interesting is that also this blue line is the transactions. The transactions have been going down as well. Now, this data the August data hasn't come out yet. So even though it's as of August 2022, the data represents data points from July of 2022. So let me just get out of here and I'll go back to this. So even though the data points represent July 2022, the transactions in the summer went down hugely and the price points had gone down quite considerably for the average house price in Canada. And I saw that. And I saw a lot of my clients coming in and saying, okay, well, we want to start buying a house now. We saw a lot of investor clients actually start hitting the market wanting to buy because they saw that the transactions, the properties weren't really moving anymore. And they saw properties now sitting on the market for 5 days, 10 days, 20 days, 30 days. And when that happens, the prices just seem to follow suit because the seller is out there trying to sell and not being able to. So it's an easier time to get a good deal. Now, from what I've been hearing from other agents in my local area, which is Aurelia, Barrie, Simcoe County, which also includes Collingwood, Wasaga Beach, Bradford, and good old Washago, is that the transactions, the number of houses sold has actually been starting to creep up in the last week or two. And this is usually indicative of the fall. Parents are getting ready to send their kids back to school. And even though it might make sense for parents to buy and sell during the summer, they usually do that in this fall because the kids are at school and the parents are able to set their houses up to sell. and get them ready and make those big moves in September. And traditionally, September has been a hotter market for real estate. And looking at that graph, we can see that in the fall, if I can just bring that up here again, where would that be here? All right. I can bring up this graph here. We can see that average home sale prices in the fall, usually here, fall of 2021, transactions increase as well as home prices increase. And here, fall of 2020, home prices increased. Although in 2020, transactions seem to decrease. So if we look at that, increases in September of 2020, increases in September of 2021. So what's going to happen in September of 2022? It's going to be a very interesting market this fall. I'm not sure, because I'm not a real estate agent, on what to call here. But as a mortgage broker, I'm seeing a trend that, if the transactions are down and the sales price is down, which also has been indicating that inventory has been down quite considerably compared to earlier on this summer, we could possibly see some additional movement in the fall. So what happens if you're a seller trying to sell right now and you can't sell your home? First of all, as your mortgage broker, I really can't do too much other than say, I believe your home is probably overpriced. A lot of the problems I'm seeing these days are the homes are just overpriced if they're not selling. And, you might be a seller where you need to get a certain price on your home. And if that's the case, maybe you should hold out. Maybe it's better to hold out. I'm not sure. You need to talk to your real estate agent about that. But the main thing is, if you want your property to move, a lot of buyers right now can't afford those payments that they once could in the beginning of 2022. And that's simply because we're not looking at interest rates at 2% anymore. We're looking at interest rates around 5% right now. And with that, the payments have really ballooned. And with that, so have the payments. So if you're looking to sell your home right now, you really need to look at the price, make sure that you're competitive, and make sure that your realtor is out there sharing your property as much as possible, getting it on social media, and getting it all over the internet. Also, just getting it out there as much as possible, maybe even open houses. I know those aren't really the best thing for a lot of real estate agents, but they seem to work for some of my clients. So if you're looking to sell and you can't sell right now, it seems that most of my clients have their houses overpriced. Now, if you're looking and waiting for the market to crash, because we had this article come out recently, if I can just share this one with all you guys. We had this article come out by TD's economist just a couple days ago, actually, 2 days ago. And with that, they're projecting a 25% drop by early 2023. Now, there's Team Goran there. They're in Windsor. We've worked with them a few times. Shout out to Ruthann Osborne there in Windsor. There is a TD Bank report that suggests prices could fall 20 to 25% from its peak seen earlier this year. Now, if we take a look at that peak, it's actually going to show us that prices have fallen 23.8% already since the start of the peak this year. So even though that report shows that prices are going to fall 25%, as a mortgage broker, I may not know what I'm talking about here, but they've already fallen 23.8% from the peak. And what I'll do is I'll share that graph here one last time so we can take a look at that. Okay, this is the peak, $816,720, February of 2022. That was the average house price. And if we minus off 23.8%, you get this, $629,971. Now, if we look at TD's prediction of 25% down, that would give us an average sold price of $618,000. So it's really going to be interesting to see what happens here because a lot of banks, they love to see people buy more expensive houses. They love to give people high interest rates. So if those who are buying a house miss the boat on when the bottom is in this market, if you're one of those waiting for the prices to crash that 25%, they've already crashed 23.8%. So if any of those buyers miss that opportunity and wait until the beginning of 2023, house prices could go back up by then, and then the bank will be able to give you a higher interest rate on that higher mortgage balance. And that's a really interesting concept. So maybe this report could be misleading in a lot of ways because, as I mentioned previously, the fall market usually does have a little bit more activity as kids go back to school and as parents start getting their houses ready and more inventory hits the market. And people just need to move. Some people need to make that change. Some people are moving for jobs. Some people are moving for other purposes. So it'll be interesting to see what happens. So if you're waiting for the market to crash, perhaps you might be asking yourself, has it already crashed? So if it's already crashed, then it's crashed 23.8% since the peak, the way we look at it here. So what else were we going to talk about today? We're looking at a few different options here. Are you shocked by these mortgage rates? I certainly am. And with these mortgage rates the way they are, hitting 5% for a fixed rate mortgage, I know the prime rate right now, a lot of mortgages are sitting for variable rates around 4.6, 4.5. Some variable rate mortgages are in the low fours right now, so you're still getting a better deal on the variable rate mortgages. However, September 7th, we are having that upcoming rate announcement, which I fully believe will be an increase. I'm interested to know what you guys are all thinking about if there's going to be an increase or if there's going to be a large increase or what the increase will be. Personally, I think we're looking at an increase of approximately 0.5 to 0.75%. And with that, anyone that's going to have a variable rate mortgage with a fixed payment will have their amortization increase to make up for that extra interest. And anyone that has a variable rate mortgage with a variable payment will keep their amortization the same. And essentially what will happen is the payment will go up accordingly to make up for that extra difference of interest. So it's really interesting to see that. Keep in touch with me if you have any questions about this. It's going to be really interesting to see what's happening with the market and variable rates coming soon. So I'm just checking here. I'm having a problem on Instagram for whatever reason. It's not loading. Let's see here. Yeah, not loading for whatever reason. So if you wanted to view me on Instagram, do apologize about that. It's just not happening right now. So looking further into the market here, we've talked about mortgage rates. We've talked about not being able to sell. And we've talked about if you're one of those folks waiting for the market to crash, perhaps you're having trouble qualifying for a mortgage. So let's talk about that. I've had a few of my clients come to me. They're having trouble qualifying for a mortgage that, perhaps I can add a cosigner. And in those cases, because the stress test has gone up so high, a lot of my clients that are getting cosigners are finding that even when they add a cosigner, they're not able to qualify at the moment because that stress test has gone up so much higher. We have a question coming in from Michelle. Is variable a better option for rates or fixed? Thanks for the question. It's really an interesting question because it all depends on what your term of the mortgage is going to be. If you're taking a 5-year term and you're okay with the fluctuating mortgage payments, then in that case, it might be better to take a variable because even though rates might go up and your payment may go up short term, you could capitalize once the rates go up enough and everyone gets, and the Bank of Canada sees that, rates will eventually start to come back down. And when rates start to come back down, they start to come back down pretty quickly, and those customers can take advantage of those rate decreases and the payment decreases. Whereas the fixed customers, they're locked in for those 5 years. And that's a high penalty to get out of that mortgage, to take that lower rate if the rates start going down. But if you're a client that believes that rates are going to go up and continue to go up, then in that case, it's really hard to look at that and at a variable rate, because if you're looking at a fixed rate, you're locked in, and it's really good to be able to keep that for the long term, and to be able to keep that fixed rate and not have to worry about the rates going up. Myself personally, I prefer the variable rate option, and I've taken variable rate mortgages on the last 2 mortgages I've done this year for my own personal mortgages. So part of that reason is because I like to change up my mortgage once in a while, and to do that, you got the lowest penalty to go variable. So if you're having trouble qualifying right now, a lot of people are adding co-signers. Some people are even adding a basement suite to their apartment so they can earn more income, and then they refinance. That lease agreement for the basement suite, or if you're renting out a second unit in your home, can really increase your income a lot higher and give you a better advantage when getting a mortgage. Another option that a lot of folks look at when they're getting a mortgage or trying to afford a mortgage is a higher down payment. And even though a higher down payment doesn't work for a lot of people, it's really good to be able to do a higher down payment, because that could knock you into a different mortgage category, a conventional mortgage, which you're allowed to increase the amortization to 30 years or 35 years. Some of the lenders that I work with are allowed to increase that amortization to 40 years. So that's really good, and it keeps your payments lower, and it allows you to qualify for more money. So co-signing, renting out a second unit, increasing your down payment. But it's really hard to qualify for people right now. So even though people have been waiting for the prices to come down, we're finding that folks that could have bought last year when the rates were at 1 or 2%, they could afford, say, $500,000 or $600,000. But now rates have gone up to 5%. And now those same folks, even though their income has gone up slightly, are now affording maybe $300,000 or $400,000, depending on the metrics of their application. But that's really scary, because for anyone that's been waiting for the market to crash, you're now in a worse situation to qualify for that same house. So always reach out to your mortgage broker to see what options you have to qualify for more money. There's many different ways I can look at your application, and many different lenders out there that can help you get qualified. There's not only the big 6 banks in Canada. There's 30, 40 lenders in Canada that have great rates on great mortgages. So it's good to be able to have a broker that can analyze your data across all those different lenders and get that out for you. So anyway, that's some of the information I wanted to talk about today. What's going on in the market, what's essentially going to go on in the future. If you're just popping into this video now, make sure you look a little bit earlier, because we did hit that peak in February of 2022, and since then we've dropped 23.8%. So if you're waiting for the market to crash, and you saw that article from TD Bank, they're saying a crash of 20 to 25% by early 2023. Well, I think we've already hit that 20 to 25% today. And I believe that once August's numbers come out, we've seen transactions fall quite low, and we've seen prices come down quite considerably. Because of that, I feel like it might even be a lot lower. However, I'm a mortgage broker. Don't take my advice on that. Take my advice on the mortgages and rates, and make sure you talk to your real estate agent about your home values and where to go next. And if you don't have a real estate agent, make sure you reach out to me. I can set you up with a real estate agent I work with agents in markets all across Ontario, whether it's Windsor, London, Woodstock, Kitchener, Waterloo, Toronto, Durham, Kingston, Ottawa, Barrie, Orillia, Sudbury, North Bay. We have contacts in every city, and we've done mortgages pretty much in every major city in Ontario. So we can hook you up with a real estate agent so they can get you the information you need to help sell your home and look at the market and what's happening in your local area. So again, if you're just joining me now, make sure you look back earlier in the video to see the graph where I show that the prices have already dropped 23.8% since the peak of February 2022, and that article that has come out by TD saying that prices will drop 25%. It's a little misleading because they're talking 2023, but I think it's already happened. So make sure you take a look at that. And if you have any questions, reach out to me, Joe Bladek. My number, 705-238-3479. Email me. Make sure that you get in touch with me to look at your mortgage situation. Follow, like, comment, and share this video on social media. I would love to get this information out to everyone so they can feel more confident about where they are at with their mortgage process, help people qualify for more money, and being able to get into the housing market. And if you're a first-time buyer, also reach out to us. We have access to credits and rebates available for first-time home buyers that can get you into the market at a lower price, not a lower price point, but with lower cost on the closing costs and get your money back that way. So again, thanks for watching. This is episode 95 for Canadian Mortgage Weekly. We're almost at 100 episodes. Pretty excited about that. And we'll see you next time, everyone. Thanks for watching.